Welcome to this week's edition of Trade the Trend, a weekly video discussing where the stock market is heading. I'm Jason McIntosh. It is Friday the 7th of January 2022. As always, this is general commentary and doesn't take your personal situation into account. Alright, with that said, let's jump to our first chart. Okay, well we're going to start with the local market today, the ASX 200. And look, it's been a really interesting couple of weeks. We've had a key breakout. We had a key breakout in the Aussie stocks in late December. I'm just going to draw the pattern that we've broken out from on this chart. It's a symmetric triangle, and you probably remember we've been looking at this over the last maybe over the last month or so, maybe the last 6 weeks. And formed up really nicely during this period here. And the symmetric triangle, look, it's one of my favorite chart patterns, and it's also one of the most reliable chart patterns. Now, when I say reliable, that doesn't mean that it works every time. No pattern does. The market doesn't give anyone a free kick where they know they're going to get a point. But it is, look, it generally is quite reliable. And look, we've been talking about this a bit over the last few weeks, and really it's one of this really does have all the hallmarks of a classic continuation pattern. And by that I mean, like, you know, where you get a rally in the market, you get a good market rally, you get a consolidation, and then you get another rally. That's what a continuation pattern is. And it's interesting to look at this one, how it all started. So it started here back in August. And if you think back to what was going on in August, it was, look, we had the Delta lockdowns across particularly New South Wales and Victoria. There were inflation scares were coming into the markets, and that was rattling a lot of investors. And iron ore was also getting into its full-on collapse from around this August point. And then we had this sell-off during September, October, where there was a lot of nervousness, a lot of skittishness in the markets, and really this whole period took 4.5 months to work through, a 4.5 month consolidation. And so look, we had this break high here. It was just prior to Christmas, where the market nudged higher and then got another kick along just after Christmas, before New Year's. Then we came in for the first day of trading for the new year, and we had it was actually the ASX 200's biggest opening session ever for a new year. So look, that was all looking pretty good, pretty encouraging. But within just like a couple of weeks of this breakout, the integrity of the pattern is really now being tested with the sharp sell-off that we had in the markets on Thursday. And a lot of this comes back to what's coming out of the Federal Reserve in the US, with the tightening program looking like it's going to the rate of that and the timing of that increasing. And so look, let's jump over to the hourly charts, because as you'll probably know, I like the hourly charts for getting some more detail as to what's actually going on. And now when we look at this on the hourly basis, let's start by putting in the Fibonacci levels of the last run higher. So we get from this point to the peak, and so look, the market fell through the bottom of the fib levels. That's a warning sign. You'd normally expect a healthy market's going to stay above the 61.8. Doesn't mean that that's it and it's all over, but it's definitely a flag. And a red flag at that. And now I look at this rebound that we've had during Friday. It could potentially it can all work out from here, but I do worry that we've had this snapback rebound, and then just looking through what's been going on today, we've had this sharp move back down, erasing this little rally we had here early on the open on Friday. Look, the worry is that this rolls over and starts to come back down, and then we're testing Thursday's low point. And if we do break below this low point from yesterday, which is Thursday, I think you then have to say the market then goes into neutral territory. So look, I think if that were to happen, look, I think we would have to consider some of the more bearish scenarios. But look, that hasn't happened yet. So look, let's just jump back to the daily. Okay, I'm going to get rid of those fib levels. We don't really need them just now. Let's just have a look at this on the daily. So look, let's start with a more bearish possibility. The bearish possibility is that this market does start to roll over again, and that over the next week we see it come back towards the low from Thursday, and then break down back into the range. That's look, that's very much a possibility. It's not my base case at the moment. I've got to give the bullish side the benefit of the doubt, because that's the trend. That's the trend of the overall trend of the market is up. But this is something that we're on the lookout for. We want to be aware that this could happen and be prepared should that be the case. But now let's look at the bullish side, which, look, as I say, I think they say the bull market climbs a wall of worry. Everyone's always worried, when's the top? Lots of worried all through this period here, and the market did keep rising. So that's why you give the path of least resistance, which is currently to the upside, you give that the benefit of the doubt. The way this could play out is that the market does stabilize around here over the next maybe over the next week or two, and then we start to see it move higher like that. That would be your classic triangle pattern, where you get the breakout, you get a return move, it does some work around there, and then pushes higher. And the return move is all about getting people, shake them out of their new positions. They see the breakout, they go long the market pulls back, they get worried, and they get out. That's what the return move is all about. Maybe that's what we're seeing now. So I'd have to say that's the way I'm leaning at the moment. And look, we can get some measured targets out of this pattern. So when you get a triangle, you can get an idea of where it could go, and you do that by measuring the width of the triangle from the high point to the low point. And then what you do is you bring it across to the breakout point. There's the breakout point, and you project it higher. So that'd be the theoretical target. Now look, sometimes these targets, they fall short, other times they shoot through and go well and beyond. It's nothing that you back with any certainty whatsoever, but it gives you an idea from a risk reward perspective about how much you could potentially get out of a move. And so then you can set your risk according to what you could possibly get. And if we look at that from where we currently are, which is around about here, that's about 7% higher. If that were to happen, I'd expect that maybe to play out over the next 3 months. The first quarter of the new year, that could come into play. And but look, as I've been saying, I think it's about giving the bulls the benefit of the doubt, because we really don't have a clear-cut and firm reason to say that this market isn't going higher. There's some flags, but flags aren't reasons to say the market's topped. And but look, we do seem to be around a bit of a key pivot point at the moment. We want to see what's going to happen here. Is this breakout going to hold, or is it going to give way? So key pivot point. I'm still long the market. I'm going to continue to be long the market while my trailing stops are intact. And look, one thing that's interesting to do, it was interesting yesterday to look through my own portfolio after Thursday's falls. Came in after the market closed and thought, oh well, look, some of these stocks are going to be might be looking a bit ordinary after the market quickly dropped that 2%. Actually wasn't as bad as I was expecting. So I'm just going to show you. These are stocks in my own portfolio, and these are very much the same as the signals which I give through my Motion Trader subscription service. So many of the members who subscribe to my service would have these stocks in their own portfolio. So one of the stocks I have in my portfolio is this one here called Ensadra. It's a tech-orientated company. I've got a buy signal in here as the stock was breaking to a new high. I've got some initial upside. got a bit of a pullback during November, but then I'm just looking at it over the last couple of days. So here's Thursday's action just here, this little green bar. Market was down quite a bit, down 2%, and Sadra barely budged. If anything, I'd say this is a little bit of a bullish, maybe a bullish pennant formation through here, which then could lead to a rise. I thought I might have come in yesterday and seen it down here. Didn't happen. So it's always a positive sign when you're expecting your stocks to come off maybe quite a bit, but they hold firm. It shows underlying support. So look, that's just one stock. That's a positive. This is my exit point down there. I give all my stocks plenty of room to move. Show you another one. This one is I've had this one since, when was it? May. Just going back here, find it. It's a stock called Oz Forex. It's this is it here. So just interesting to look at like how this trade's worked. So this is where I got my entry signal. I also sent out a signal to the members of my Motion Trader subscription service then. Moving averages had turned higher and the shares had broken above this point here, so broken to a new high. That's the signal. And here's the exit point down there. So giving it plenty of room to move, because you can never pinpoint exactly when a stock's going to accelerate higher. You're just looking for signs that the upward momentum is shifting to the upside. And so just following this through, you can see how the trade took a few months to get going, but then it really starts to get some nice momentum. Again, there's pullbacks. Always get these pullbacks mid-trend. They're consolidations. It's all normal part of a market. Some more upside developing. It's interesting when you get these points here where the market starts to pull back. And this is why I've got that wide trailing stop. So you can easily see off. Here's my trailing stop here. Market comes back. This is barely a blip for me, but some people see this sort of fall. That was what was that? That looks like a 10-15% fall. Unsettles a lot of people and they sell. But this trend was still intact. Here we are now. And of course, when many people sell, sure enough, quick rebound and off to new highs. This was the price action on Thursday. So again, Oz Forex really held together nicely. There's no sign whatsoever that this market or this stock is topping. Could consolidate, but there's no sign of a top in this pattern at this point in time. So when you're looking at individual stocks, you can see if the market is really getting bearish, I would expect to see it showing up in more of the individual stocks. One more to show you. This one I've had in the portfolio for a little bit longer. Came in September 2020. So I've had this one for 15 months or so. Here it is here. John Ling Group, involved with strata management. I just quickly go back to where the signal came about. Again, this is where I got my signal. Had broken up, hit a new high here. That was a signal to get in. There's the exit stop. Trundles along nicely. Just like Oz Forex, decent pullback there. But you give them plenty of room to move. You can see off a lot of that sort of just ebb and flow that you get within a trend. There's something a little bit more interesting. That was heading towards a 20% pullback, I think, when you look at that one there. This is why you need wide trailing stops. I hear a lot of people say, look, I prefer 10% trailing stops. I really want to look up, really want to protect my profits. If you've got a 10% trailing stop, you're going to get a movement like this at some point. It's going to take you out. It's really hard to stay with a trend with a tight trailing stop. I've seen so much money given back, or so much potential profit foregone by people trying to cling to their open profits too tightly. So the wide trailing stop, I think it's a must for staying with these big medium-term trends. And of course, then the share price kicks on again. Doesn't always kick on. Sometimes it hits the trailing stop. Ultimately, it almost always does hit the trailing stop unless the stock's taken over. But you want to stay for these big moves for as long as possible. Here's the price action from Thursday. This stock actually went up. So a stock which had been rising for quite a while, I thought that this was a prime candidate for a bit of a swift move down with some people just wanting to lock in profits. But it's actually risen on a down day. So it's a positive signal. I think that this market is overall looking quite reasonable. And okay, so look, let me jump over to the US markets and just have a look at what's been going on over there. Okay, just get back to where we were. Okay, so let's so there's the ASX 200. So let's now jump over to have a look at the S&P 500. So look, this is it's interesting to look at this. We got a bullish break to a new all-time high towards the end of last year. We actually had what looked like another triangle pattern which had been forming, not as prominent as the one in the ASX 200, but look, a notable consolidation as well. And then just here on the 27th of December, we got the pop higher, we got a breakout. It's look, now we're back within the range. Maybe this breakout was all just a bit premature. Maybe this was the thin holiday trading between Christmas and New Year, and it just wasn't time. It felt like it was a bit early. I thought we're going to see the market. If you remember the last video, I thought the market might have come back during that New Year's Eve period, and then punched higher. So look, maybe the market was getting a little bit ahead of itself. But at this stage, anyway, we've got to say that was a false break. And look, I'm still prepared to give the bulls the benefit of the doubt despite this false break, because look, this trend, I'm going to just put some moving averages on. Look, the market's come back to the 100-day moving average. There's nothing here to say there's a top in the market. This is an upward trend. This no more looks to be a top than this point here, or this point here, or this point here, or any of them else. It could lead to some consolidation, but it doesn't look like it's some major topping pattern that's going to see the market trend lower over the next 6 months. At this stage, again, it's about giving the bull the benefit of the doubt. And look, if we jumped off every time the market pulled back from a new high, then we'd almost never be in the market, because you'd always be going, oh, is this it? Is this it? Is this it? So giving the bull the benefit of the doubt. This false break, it does muddy the waters somewhat, but look, at this stage, there's not enough to say that that we have an imminent trend change taking place. And look, and by the way, if you like this video, if you're getting some value, please hit that like button. It tells YouTube that you're getting value and it shows other people. And also just leave a quick comment, just, hey, I like the video. Even something as simple as that, it also sends a message to YouTube saying, hey, people are engaging with the video, it's worth showing other people. And if people are watching, well, I keep making them. That's how it all works. So look, that really helps me a lot if you could please do that. Okay, now I want to go over and look at the Nasdaq, because that's really interesting as well. So look, I'm going to tell you just going to take that off for now. Just going to, like, the biggest point of concern I have with the Nasdaq, actually, that's the Nasdaq equal weighted. I want to look at the Nasdaq market cap index. Okay, so the biggest concern I have with this is that we have bearish divergence. So whereas the S&P 500 and the Dow Jones made a new all-time high a couple of weeks ago, the Nasdaq didn't. Neither did the Russell 2000. It's ideally, you want to see a healthy market. All the indices will be making new highs together. When you have one start to lag, you get divergence, and that can be a bit of a warning sign. And particularly so with the Nasdaq, given this being such a key driver of the bull market that we've had over the last 18 or so months. And if the Nasdaq were to stall, well, then I think that potentially spills over to the broader market. Now, I just want to quickly look at one of the largest component of the Nasdaq is Apple, listed on in the US, of course. And just call up the chart of this and just see how this is shaping up. And it's interesting because look, we've had this strong move up in Apple, and we are giving some back at the moment, and we're well above the 50-day and even further above the 100-day moving average. It gives the appearance to me that this market or this stock may need some more consolidation. I'm not seeing a major top in place. Who knows what develops later on, but at this point it doesn't look like there's a major top in place, but it does look like it may need to consolidate. I'll put the Fibonacci's on. They're a little interesting to look at, and look, this market could pull back to the 38.2%, which brings it around the 50-day moving average, still above the 100-day. Maybe it does something like that and then starts to turn higher again in a few weeks or so. All speculation, we don't know, but it does have that sort of feel to it that it needs to do a bit more work. And then that, of course, impacts the Nasdaq, which then flows through to everything else. So let's just jump back to the Nasdaq and just look at a few more features on this chart. What's interesting is that there is quite a well-defined upward trend channel in the Nasdaq. It fits a bit like that, project up. So yeah, look, that's it's a pretty good fit. Look, it's a really nicely defined channel, and a good channel is where you have multiple touch points, not just 2-point trend lines aren't so valuable because you can draw 2-point trend lines everywhere. So once you get 1, 2, 3, 4 touch points, a trend channel really, or a trend line in general, starts to be of value. And then we look at the touches on the top side, a little bit of an overshoot, but we'll call that a touch. 1, 2, and just recently 3. So look, that's a well-defined channel. And then we look at it just in here, and we've got a bit of a flagging formation developing. So you can see we've got a couple of points there, got a couple of points below. So we've had the strong move up, and then we've got the flagging formation. So on the bullish side, a flagging formation is a sign that there's of consolidation within a trending market. So in this case, the market is trending upwards, flags sideways, breaks higher. If this market continues to consolidate, it's consolidating around the 100-day moving average, also above the trend channel support and above the flag's base. So if we want to come up with a bullish scenario for this market, it is that looking at Apple, maybe there's more consolidation. Maybe it does do something like this over the next could be the next 2-3 weeks. Then we start to get a bounce back near those highs, a pullback, and then we get a breakout. That's certainly a possibility. I think that's look, that would be, I've got to say, this is my base case. It's always worrying when the markets are getting down here. You're worried that it's going to break down. But at the moment, as I keep saying, it's giving the dominant and the established trend the benefit of the doubt until it gives us reason not to give it the benefit of the doubt, until it gives us reason to switch our view. That's the bullish side. What we've got to watch on the downside, the bearish scenario, is that this market does start to weaken off. We do get a test, we get a bounce, and then we get a break. That is, look, it's still on the table. It's very much on the table. At some point, we are going to get that 10 to 15% correction. We don't know when, but it's looking for the possibilities, looking for what could happen. And so, look, that's a possibility that we need to be aware of. Now, I want to also let's see. So there's some possibilities. Look, I had an interesting comment on one of these videos a few weeks ago. A viewer came on, and look, you'll know if you've been watching these videos for a while. You know I talk a lot about possibilities, what could happen. And a viewer said, "Look, hey, what's all this with this could happen and that could happen? Why don't you just say you don't know?" And well, look, I've got to tell you, I start every video from the standpoint that I do not know what's going to happen. I don't. Nobody does. Nobody knows what's going to happen. Now, this is the interesting thing. Lots of people talk with certainty. I'm sure you've seen it as you look over the net. People will say, the market is going to crash, or this stock is going to go to the moon. Well, that's all well and good to say that, but there is, we all like to talk about crystal balls, but of course none exist. We actually don't know. So I don't know how anyone can say with certainty that something is going to happen. You can be confident something's going to happen. You can think there's a high likelihood of something happening, but nobody actually knows. So what I've found over my years in the market is the best traders and investors, many of them talk about what could happen. The market could do this, or the market might do that. And it's all about identifying the possibilities, assigning what the odds are, and you hear me saying, I am favouring the upside. I think the odds favour the trend. So it's identifying the possibilities, putting the odds on them, and then using strategies to play those possibilities. And so I'm currently playing those possibilities myself. I'm positioned on the bullish side, but I have an exit plan. I have an exit plan for the bearish scenarios, which I know could happen. They're my trailing stops. They're my point of retreat if the market does reverse course. And look, at the end of the day, I think it comes down to having a robust strategy and then being consistent and being disciplined in the way you use it. And this is really that's really the formula that helps successful traders and investors come out on top. It helps them outperform the market over time. Doesn't bring them out on top week in, week out, but over a period of time, if you've got those strong strategies and you follow them, you stick to your rules, you give yourself every possible chance to beat the market. And that's what I do. That's what I help my Motion Trader subscribers do. And look, if you're interested in understanding a complete strategy, from the buying to the selling to the giving stocks room to move, if you're interested in getting a complete strategy, and look, you haven't come across my Motion Trader service before, come across my website, because I've got some free training there which goes through that whole strategy process. The website's motiontrader.com.au. Okay, look, let's call that a wrap for this week. Hope you got some value out of it. Please give me a like if you did. And look, hopefully 2022 is going to be another good year in the markets. Time will tell though. Let's wait and see. Let's come back next week and try and put all those pieces together again with whatever the market gives us to work with this coming week. Thanks for joining in. Catch you next week.